हमने बहुमत हासिल किया है और मैं कई बार कह चुका हूं, शब्द अलग होंगे लेकिन मेरे भाव उसमें एक सातत्य है। सरकार चलाने के लिए बहुमत आवश्यक है, लोकतंत्र का वही एक सिद्धांत है, लेकिन देश चलाने के लिए सर्वमत बहुत जरूरी होता है।
Welcome to a very special edition of India Market Close. And while I might be wearing red today, that's definitely not the color on the street or your screen. It's a complete thumbs up to the NDA Modi 3.0 vision that we've seen laying out. The Nifty less than 100 points away from its all-time high. We'll get that counter up for you. Tuesday's sell-off pretty much recouped, and it is across the board. I'm just going to quickly start with the key metrics to just give you a sense of what the markets are looking like right now. Let's begin with the advanced decline ratios, really, and the kind of strength you've seen in the markets from the get-go, from the start of trade today as well, where advances are outnumbering the declines by a huge level. So you've seen a positive advanced decline ratio. We'll pull up the heat map also in a bit, because you're really seeing an overall churning of the street. Look at that, 1766 advances to 300 declines, nearly 1:6. So the street is definitely churning. Market breadth has been fantastic. I'm waiting to see what the volumes are like, because remember, we saw record volumes on the NSE this week. Is that going to be repeated? This is the Indian investor coming back in full force. I don't know if the FIIs, who must be feeling FOMO by now, would be coming back as well. We'll pull up the heat map very quickly to give you a sense of what's working. It's pretty much everything, but the big winners today are definitely from the IT pack. And we also get that on the wall so I can see it more clearly. M&M, what a stellar show. What a stellar show on M&M. And anything to do with the rural story really is also working. The rural story, the infra story, you're seeing Ultratech there, Tata Steel, really all the components to build the country even further, which has been the focus. Wipro, Infosys, Wipro having a great day because of that massive deal with a US communication service company. It's the first big deal for Wipro under the new leadership, and that has been celebrated in a sense by the street. But all of it, your power grid, ONGCs, NTPCs, your PSCs have come roaring back. I don't know what those voices which were questioning valuations are going to say today, but really not much to say. So old economy, IT, financials, all of them doing fabulously. The only two counters in the red I can see on the Nifty 50 are SBI Life and Tata Consumer. Even your Britannia, HUL, etc., which have seen a massive run-up, are not doing as well relatively, but definitely still in the green. Hersh with me this afternoon. Good afternoon, Hersh. Even in the broader markets, I think the broader markets are performing even better.
Yes, absolutely. It's a strong street, and the advanced decline clearly marked that, Tamanna, as you did. And the broader markets also cheering the kind of solidity or solidarity of sorts shown by the NDA. Now, in just the terms of the mid-cap and small-cap indices, if we can pull them up and let's see how they're performing versus your benchmark itself, and how much are they outperforming by. Well, the Nifty mid cap is doing fairly well, 1.3% higher, and the Nifty small cap 2.5% higher. That's the kind of number we're looking at. And you look at the chart through the week. It's been a tough week in terms of the way in which the trajectory.
May I just come in and contextualize that chart for a second, Hersh? This chart is important, and we took this really, I would say we took a bit of that inspiration from something Sunil Singhania came and said on our channel, where he made the point, Murli, that if you remove Monday and Tuesday, that means Mondays, I would say unbalanced euphoria, and Tuesday's unbalanced despondency. It was extreme on both ends. Absolutely. If you really take that out of the picture, you're pretty much back where you were. In fact, you're doing much better than on Friday. So it's important to contextualize that chart, isn't it?
Yeah, so I would also add a little bit of data to this point that you made. Sunil Singhania made that observation. Basically, so 23,000 plus looks just like a number, but it has many sides to it. One, the confusion that was there, that's cleared. That's what the market is telling you. Number two, let me read from the points that I wrote, that fear and panic that was triggered, that is completely gone. So FIs who missed out are, I think FIs are the ones who have missed out in this rally, and the data very clearly shows that the domestic institutions have played a very smart strategy. In fact, if I exclude the mutual funds part of it, let me read the numbers that I have. On the day when the Nifty, that is on the June 3rd, the domestic institutions bought almost 1,900 crore. They sold 1,900 crore on that day, and the day when the markets crashed, they bought. So they adopted a contrarian strategy, and they've emerged as winners to that extent. I'm sure they would have also done a lot of trading. But the point here is, there are two brokerage notes I want to mention here quickly. Let me go. One is the Morgan Stanley note, which is very important. Basically, the Morgan Stanley note very clearly said that this is going to be the decade of India. You cannot stay away. If you stay away, you will lose the opportunity, and the opportunity is the biggest. Now, let me also read from the Jefferies note, which came today. I'm reading this. Still, if there is definitely a risk of renewed share price declines, there is one major positive to be aware of from a flow of funds perspective. That is that the foreign investors will view any significant correction as an opportunity to add, since a combination of India's outperformance in recent quarters and high evaluations, most particularly in the mid-cap space, is what the Jefferies note is saying, has meant that most dedicated emerging market investors are no longer overweight the market. Indeed, it is the case that foreign investors have been net sellers, and it's time that they come back. This is what the Jefferies note today morning said very clearly.
Let me just get that view from Unmesh Sharma as well. He's been waiting a while, Hersh, and we need to go to him. Head of Institutional Equities at HDFC Securities. Unmesh, thank you so much for your patience, and apologies to make you wait. But, we wanted to show viewers what Prime Minister Modi was saying in the Central Hall of Parliament, because I think that's something that the markets are also looking at very, very closely. And keen to get your views on what we're seeing in the markets today. This is over and above a relief rally, isn't it?
No, absolutely. I think, even I was watching with a lot of interest. It was not that difficult to wait. I think what has got established, if you see through this speech as well as what's happened after the election results have come out. I think one big fear for everyone was one that a lot of instability in terms of clarity on who will form the government and in what shape and form will lead to a lot of confusion and hence volatility in the market. I think if you look at the way in which it was tackled by the BJP very swiftly and clinically in the last 2 days, including in the speech today, they've made all the right, from an investor perspective, all the right cues were there, right? One is that a strong alliance, which means that the number of close to 300 as far as the NDA is concerned is rock solid. Okay, the two primary constituents of that are very much standing there with them with letters of support. And on top of that, this entire discussion about the fact that we are all together, and then there is this point about forming consensus to run the nation. These are all the right noises that you would find. It's pretty much. So, the way to think about it is it's like back to the Vajpayee era with a very stable coalition. But do remember that in that government, the number of seats of the ruling party was 183. This is 240. So in that sense, I think the market's really taken a cue that there is a lot of stability, not much confusion. It's back to normal business as usual. I think people have absorbed all of this, rationalized, and kind of moved on.
Unmesh, one quick question. Just with regard to if someone missed the Tuesday fall, what should one be looking at the moment in terms of buying? Because it seems that for someone who's missed that Tuesday fall, it's going to be difficult to go back, of course, but it's going to be difficult to get those valuations again in a jiffy.
Yeah, so look, what's gone is gone, right? And the point is that that level of confusion to come back will require a very serious political event. At this point in time, given what we are seeing today, I can't see this happen, at least not in the near future. At the same point in time, I think the way to think about this is that given the efficiency and clinicality with which this government is getting formed, do we expect more noise? There will always be noise. The newspapers will continue to print who spoke to who and whatnot. But at the same point in time, in all likelihood, with upcoming state elections, maybe the numbers may actually even go up. So the coalition may actually become stronger for all you know. But in any case, I think the way to deal with this is to forget about the move now. As things stand today, we are looking at a stable coalition which will rule for 5 years. In fact, if you look at since 1989, this is like, with the exception of the last 10 years, coalition was normal, right? So from the time that in 1991, the capital markets really took off till today, with the exception of these two governments, is back to normal. There is no reason to worry about any of this. The way you would play this is that I think there are consistent themes which will continue. One is fiscal consolidation will remain a theme with the RBI dividend and tax collections. And in a sense, indirectly through the benefit of addition into the JP Morgan indices, I think the bond markets add the capital available for the government to be able to do its capex as well as fiscal consolidation agenda remains very strong. So what you would want to do is more of the same. You divide this between domestic capex, maybe add a little bit of consumer, which is what we have done in our model portfolio yesterday. Because there will be a little bit more, two things. One is the monsoon is expected to be good, plus some, moves over a 5-year period in the direction of supporting the lower end consumption. We believe that, this is as good a time as any to enter the markets. You do it in a staggered manner, you will get opportunities, we believe. But the long-term story, I think, definitely is back on track.
Got it. Okay, thank you so much, Unmesh. We'll let you go on that one. Thanks for all of your perspective. But we'll quickly switch focus. We had the NDA meet, of course, a short while back, and we had all of the allies talk about their support to the NDA alliance as well as to Prime Minister Narendra Modi. Listen into a few of those bites.
ये प्रधानमंत्री हैं और फिर प्रधानमंत्री होने जा रहे हैं और इन्होंने पूरे देश की सेवा की। अब पूरा भरोसा है कि जो कुछ भी बचा है अगली बार ये सब पूरा कर देंगे और जो भी हर राज्य का है, और हम लोग पूरे तौर पर सब दिन इनके साथ रहेंगे और पूरे तौर पर जो कुछ भी है आज जिस तरह से भी ये करेंगे बहुत अच्छा है. We are congratulating all of you. We have won wonderful majority. I have seen for the election campaign. For the 3 months, Honorable PM never took any rest. Day and night, he had campaigned. Same zeal. He started and ended same spirit. In Andhra Pradesh we had 3 meetings, public meetings, 1 big rally. It had made a huge difference for winning the elections in Andhra Pradesh.
All right, so those are the calming voices for the market, really, where allies, and those are the 2 key allies, which between them have 28 seats and make up the key portion of the NDA's tally, and them coming out and speaking in clarity about how they support and they admire Prime Minister Modi is what's helping the market as well. Ashok Malik, partner at the Asia Group, is with us on the show now. Mr. Malik, very good afternoon to you. Great to have you back on NDTV Profit. Just want to get your perspective of what you thought was the key message out of those speeches and what we heard from the Central Hall of Parliament today from Prime Minister Modi setting the agenda for the next 5 years. Was it also an attempt to ensure that there should be no ifs and buts or doubts about Modi 3.0?
I don't think there are any ifs and buts and doubts about Modi 3.0, because if you look at the composition of the Lok Sabha, it's a very lopsided composition. The BJP has 240 seats, the next party has 99 seats, and then you come down to the 30s. No feasible government is possible without the BJP, and obviously the BJP needs allies. It cannot run a BJP government, it can run an NDA government. And the Prime Minister constantly referred to that, constantly referred to the NDA. This is going to be an NDA government. There are some issues on which different parties may disagree, but there's a vast agenda, a vast economic agenda especially, on which all parties more or less agree. And there might be minor tactical differences here and there. So, the thrust on infrastructure spending, capex spending, which has been growing apace in the past few years, building capex capacities with great urgency, the push towards manufacturing, creating a more attractive and stable market for not just FII but frankly for FDI, and the thrust towards creating jobs, using all this to create jobs. The job question has, this mandate has shown us the job question is required a great urgency across the Indian countryside. And all of those are issues on which all the parties of the NDA and perhaps even beyond are in agreement. Those are not controversial issues. So I think the Prime Minister and the NDA was very keen to give the impression we recognize the responsibility that this mandate has given us. We recognize that we have been asked to work together, and we want to get back to business straight away. It was a very calming message, but a very sure-footed message made by very experienced politicians. Chandrababu Naidu, Nitish Kumar, and of course Narendra Modi are all very, very experienced people, and that's the message that we're trying to give.
Absolutely. Mr. Malik, in terms of what you could glean from the vision for the next 5 years, and the audience listening to you right now would also be interested in those key details. For example, focusing on the green era, focusing also on increasing the savings of the middle class. These were some of the key messaging points that the Prime Minister was also talking about.
Yes, increasing the savings of the middle class, I expect even greater thrust towards, self-owned housing. The self-owned housing revolution in India has been one of the facets of the past 20 years. It needs to go deeper and further. It's not just a question of the same person investing in 3 houses, but every family owning a house. That's something the PM has spoken about. So it's physical assets which the family can use. Then, greater confidence in a stable stock market, because so many of household savings are not risky instruments in the stock market. So building a stable and trusted mutual fund culture, taking it further, is again going to be very, very important. But before people start saving, frankly, they need a bigger job market. And while some of us are fortunate to have jobs, there is a crisis of employment which this election has shown, and which Mr. Modi and the NDA government will have to address well before the next election. And I do believe that it's going to be a very, very important part of the agenda. The push towards manufacturing, the push towards greater infrastructure spending, and the push towards the green transition at the same time, harmonizing both and doing them in parallel, will remain. And do remember, in this, people like Chandrababu Naidu will be of great support to the Prime Minister, because they have pretty much the same vision. So I expect Andhra Pradesh to really push on the green transition and on green manufacturing, which remains a big opportunity for India. All of these are non-controversial issues. They are not social or cultural issues that one party supports and the other opposes.
Right.
There is a vast commonality across parties.
Yeah, and I suppose that
Parliament will be difficult to manage.
Yes.
But the effort will have to be made to take everyone around.
True, and the fact that that effort will be made, is being made, was also made evidently clear. Thank you so much, Ashok Malik, for speaking with us. In fact, let me come to you, Murli, just on that point, that any question about how an alliance will be managed was answered very, very elaborately.
Yeah.
So, I've worked in an alliance before. And the fact that the alliance partners have also spoken about how much they admire what the vision is for the country.
Correct. Let me focus on the latter part of what you said. Managing alliance is not a problem now. It's about managing what the agenda is for the next 5 years, 10 years, whatever the case may be. Let me not look at 10 years, let me look at 5 years.
So 5 years, because right now this parliament is for 5 years.
5 years. So I'll not go beyond that one. So in between there might be alliance issues, those things, backstage political management, I'm sure all these senior politicians who are so experienced will be taken care of. So which is why I think investors, in my view, should not worry about these things. If you find a fall like you did the other day, it may not go to that extent. Simply go and buy. That's been my line. The other point I want to make, Tamanna, is, look at the people there. Narendra Modi, Chandrababu Naidu, and Nitish Kumar, stalwarts. All three combined together. If you see, their goals are very clear, whether they want to work for their state or nation. See, if Andhra prospers or Bihar prospers, it's got its own effect in that economy. That economy will strengthen. That is point number one. Secondly, we all know what Chandrababu Naidu has done in building high-tech city. One of the reasons why tech stocks are running up today could be simply because, not because it's a catch-up rally. People anticipate that something big will come, because with someone like Chandrababu Naidu stepping in, I think the tech sector, the AI issue, all those things would be tackled in a big manner.
Absolutely. And you have Eknath Shinde, Ajit Pawar there. They have lesser numbers, but the fact is that there are more parties. In that alliance. All the spotlight on Mr. Naidu and Mr. Nitish Kumar.
Sure.
But yes, I think also the biggest factor is that the opposition is making no attempt to form a government right now. They're not even trying.
Yeah.
They're not even. They've said it very clearly that we're not going to focus on it right now. So the speed as well with which we are seeing that swearing-in ceremony, etc., is, I think, very, very important. We need to take a very short break, tells me the producer. But before we go into that break, let's listen in to what Prime Minister Modi talked about. And I thought this was interesting. He said that there was one common factor between himself and the NDA allies, Chandrababu Naidu and Nitish Kumar, and that factor is good governance.
राजनीति के विश्लेषक अगर विश्लेषण करेंगे तो देखेंगे कि एनडीए का जो लोग दिखते हैं ना, उसमें एक कॉमन चीज नजर आती है, और वो है गुड गवर्नेंस। इन सब ने अपने अपने समय में, अपने अपने कार्यकाल में जब जब जहां सेवा करने का मौका मिला है, गुड इस देश को दिया है। और इस प्रकार से एनडीए एक प्रकार से, एनडीए कहते ही गुड गवर्नेंस ये अपने आप पर्यायवाची बन जाता है।
Welcome back to India Market Close on NDTV Profit. I want to quickly welcome on board both our guests for today afternoon. We have Aditya Agarwala, Head of Research and Investments at Invest for EDU, and we have Aditya Shah, Founder, Hercules Advisors, with us. Aditya Agarwala, I think we'll have to start taking full names today afternoon, Tamanna.
Yeah.
But Aditya Agarwala, let me come to you first. Talk to us about what levels you're looking at, especially on the Nifty now. We've seen a fantastic comeback in terms of how markets have made a U-turn since Tuesday. What should one make of it, and what should one do now at this point?
Hi, Hersh. Good afternoon. Thanks for having the show. Good afternoon, Tamanna, as well. I think one should closely watch out for the high which was made on Monday. A bit of exuberance is getting extended now. And I think markets will see some kind of profit booking as we head closer to that high which was made on Monday. I think it was closer to 23,330, 23,350. So that will be an area of resistance and something that one should watch out, especially the traders, because I think from there markets can see some kind of a cool off. I don't see a runaway rally from that level. Yes, the underlying is going very strong. And there is buying momentum which is supporting the market, but one needs to closely monitor that 23,350 level. Only if that is taken out decisively and next week we see markets sustaining above that, my sense is markets then can scale past levels of 23,500 to head to 24,000 levels on the upside. Anywhere thereabouts, I would slightly lighten my positions if you were long yesterday or today morning, and look to lighten your position closer to about those levels. And if that level is broken out, then maybe you can initiate fresh longs. Otherwise, wait for a pullback in the market and then look for a buying opportunity. Casing example being, look at Bank Nifty, it's clearly underperforming. We are seeing a runaway rally in the Nifty, but look at Bank Nifty, it's underperforming big time, not able to cross 50,000 mark. Until and unless Bank Nifty crosses 50,000 mark, and it's important that the banking stock starts to take charge and they start to lead the markets as well. So only above 50,000, I think Bank Nifty will scale past levels. It will test levels of 51,000. So 50,000 on the Bank Nifty and 23,350 on the Nifty. These are the two levels I closely monitor for.
Okay, that's Aditya Agarwala. Aditya Shah, let me come to you. Were you a buyer in Tuesday's dip, Aditya Shah, or are you waiting for a deeper dip on Tuesday? And if you were a buyer, what were you buying? Are you still buying? Give us some perspective.
Good afternoon, Hersh. I was in the studio on Tuesday and I had said that I would dip in about 30 to 50% of the cash that I am holding. And we continue to be extremely bullish. Of course, in the short term, the valuations are aggressive. However, longer term, even though we are with a coalition government, we feel that it will not be as problematic because BJP still holds 240 seats and they are a lot in numbers. So I am positive per se on the market. What I am positively looking at is the large private sector banks or some bits of pharma, FMCG, and my biggest bet over the next 5 to 10 years will be in the capital goods space, where I feel that the government has invested a lot and will continue to invest more because the Prime Minister really feels that infrastructure can create huge employment in the economy. So I am bullish. Markets may turn sideways for a short period of time while they see what does the government really do in the budget, and is money being handed in the hands of the middle class or not. However, we are extremely positive, but again, a caveat: do not speculate in the market, do not punt in the market, and stay away from companies where businesses are not fundamentally very strong. Good businesses will continue to do well in this market as well. So positive on it, and we continue to buy.
Aditya, one very important point that I wanted to mark here, you rightly mentioned that do not speculate in the market. This is for investors. You see, if we can pull up the Nifty PSE chart, this for Aditya Shah, the Nifty PSE has still not fully recovered the losses that we saw on the 4th of June, while the rest of the market led by Nifty, benchmark and Sensex have recovered. What is your thought on Nifty public sector companies?
So I have said this time and again that these are some fantastic companies where the market was not giving good valuation all through 2021 and to some extent to 22 as well. However, most of these stocks are now 4x to 10x, and from the highs, they have corrected about 15 to 20%. So, in my opinion, I will not be harmed to take away some profits. I believe that in the shorter term, the rally is more or less done in the PSU stocks. They could take some amount of breather, after which they could restart a rally again. So my perspective is, just because the stocks have corrected from the top by 10% or 15%, that doesn't mean that you go ahead and take positions here. Fundamentally, look at those businesses. If the business is really very, very expensive, I will try to tend to avoid somebody like a HL or somebody, even somebody as Masgaon Dock or a Cochin Shipyard. These are really, really very expensive stocks. You need to be very careful on the bets that you really take. In my opinion, PSU companies are good companies, but in the shorter term, the rally is really done.
This question is to Aditya Agarwal. Aditya, do you think there will be some kind of cool off and profit booking now that the news is confirmed? How do you see at a market-wide level in terms of, let's say, Nifty and Sensex? Do you expect some profit booking to come in the next few days, that is Monday or Tuesday?
I do that. Maybe we can see a continuation of the run-up on Monday as well. After the swearing-in ceremony, there will be a kind of exuberance. Maybe that could be seen on Monday morning opening. But I, like I said at the start of the show as well, I don't see a runaway rally in the market. Even if the levels of Monday are taken out, I don't see a runaway rally in the market. Markets will cool off a bit, will find its feet, and it will cool off because it's too much of volatility that we are seeing in the market, down and up. And very difficult to take a call which way the markets will go. Now that things are settled and we know that the government is stable, and it's coming back to power, the exuberance will cool off at some point of time. And Monday, I think so, would be one of those days when you can see might be some profit taking from from wherever market opens. So, like I said, 23,350, the high of the previous, the high of the week, which was Monday, will be closely watched out for. If that is taken out, maybe you can see another 150-point rally. 23,500. From there, maybe you can see kind of cool off. Something that I'll keep a very close eye on is the bank Nifty, because that is where I'm not seeing any kind of significant buying emerging. That needs to cross 50,000 levels and sustain above that for any rally to materialize. It's predominantly the FMCG and the IT which is triggering the rally in the market post the carnage that we've seen on Tuesday.
Just clocked the day's highs, Aditya, as you were answering that. But give us your picks, Aditya Agarwala.
So I've got a couple of buy recommendations, Harsh. One is from the cement space, Ultratech Cement. That is looking very interesting to me. I think there is good money-making opportunity in the cement space. It has underperformed and has been under-owned. So Ultratech Cement is looking interesting, can be bought at current levels for a target of 11,100 on the upside, with a stop loss at 10,170 on the downside. The second stock recommendation is Cholamandalam Finance. Very strong looking chart setup, heading into new all-time high territory. At current levels, one can definitely look at adding fresh positions in Chola Finance for a target of 1450 on the upside, with a stop loss at 1290 on the downside.
Okay, so that's how Aditya would play it. Thanks so much. Let me though try and point out that the Nifty IT, if we can bring that up, and if we can also zoom in on the constituents there, doing extremely well in trade today. There you go, the Nifty IT index almost now 3.5+% higher. And let's also bring up the constituents. Pretty much all constituents in the green. You have Wipro leading that pack. Then you have Infosys as well, up 4.5%. So very strong cues coming through from the Nifty IT index. And we'll try to zoom in on that one a little bit, try and get more perspective. What are expectations going forward into FY25 and the like? But before I get there, Aditya Shah, let me come to you. What do you sense is the reason for this 3.5+% rally in the Nifty IT?
Harsh, I don't know if you've seen it or not. ECB yesterday has come out and cut some interest rates, and I believe that the market is now sensing that the US Fed maybe by the end of this year will start to cut. That inflationary environment is starting to slow down, and we are seeing that central banks are now coming and cutting interest rates. The whole IT premise, IT slowdown is based on the fact that there is tightening in the advanced economies. And if that starts to slow down, you will see all of these IT gains as well as pharma companies which are related to the US and European economy.
I think we've hit. Have we hit the highs?
We've hit the highs.
We've hit the
Tamanna.
highs.
So,
What
sorry,
an
Aditya,
afternoon.
we've had to
We just
interject.
said 23,000. It's over and about 23,000.
It's over-delivered. All-time high on the Nifty has been hit. 23.38 hit and then slipped back slightly, but 23.316 is the new high. Hersh, we've hit the new high. Murli, we've hit the new high in the same week. I mean, what a roller coaster.
Absolutely. No, so we this is something which we need to take note of, as Sunil Singhania pointed out. Forget that June 4 date. June 4th was kind of, people will simply forget it, the way the screen is behaving, the way the markets are behaving.
Okay.
I mean,
we've hit the all-time high on the Sensex.
Sensex.
We are 32
still
points
30
from the
points
Nifty.
away from the Nifty.
Pardon, we're getting a little excited in the studio today.
Yeah.
So, but Sensex, so it's a matter of time. It's a matter of time. It's a statistic right now. And this is what Aditya was also saying, that, we are preparing ourselves now for the next leg of a very, very solid and steady and deep bull rally and a bull run, which has, sustained a lot of this. So this 1 week, I think, is a lesson in markets as well, Murli, I would say, because on the 3rd of June, everyone we spoke to said, don't profit book.
Yeah.
A lot can happen. We don't
Yeah.
know what's going to happen.
Yeah.
Next day's results. On the 4th of June, a lot of people said, don't buy, let's wait for a few days. People who didn't listen to them are the ones who are smiling today, which I think in a large part is the retail investor.
Right. So I have a few things. Let me look at the calendar. If you look at the calendar, what's coming up over the next 3 weeks is going to be dramatic. First is the swearing in, which is going to happen day after tomorrow. And once that is done, the portfolios will be announced. Yes. Once the portfolios are announced, some of the key ministries will be watched, whether it's railways, defense, finance, of course, will be there, agriculture, infra. So all those things will be. So the day these announcements and new ministers come in, that is another point for the markets to watch and react. So markets are now watching every step that is being taken. In my book, I think over the next 3 weeks to a month, in the run-up to the budget run-up will start very soon. Budget expectations will build up. Now remember, budget is just a tool to implement the government or the NDA government's agenda of development. Here we are now looking at a combination of growth and development, which is what the market is really liking it in terms of pricing in whatever they can. The markets will try to price in as much as possible at this point in time. As the Jeffries note pointed out, people who stayed out, the FIIs, might come back. We can see that in the Morgan Stanley note. We can see how strong the economic fundamentals are. So therefore, you will see a lot of volatility going forward. There'll be profit booking. There'll be, people will come and try to pick up every dip that would be bought. And I don't think the chart is going to give you any big surprises. Plus, the monsoon is going to come up. That's something very important. By the time you finish that, your earnings season will start in July, coinciding with the budget.
No one is waiting, sir. 22 points away, 20 points away. It's like a very exciting countdown. I'm just going back to our conversation which we had on India Market Open. Yesterday, and you put out the question about can we hit 23,000 today, and I had said let's wait for Friday, leave something for Friday. We've surpassed it, and how? You want to revise it? Can we? What's stopping us from hitting 24,000 now?
No, I will not go that far. You see, yesterday when I asked this question, what is stopping us from going to 23,000? It was very clearly based on the clarity that emerged from the political front. As simple as that. It's no brainer. But today, from here onwards, it will become very, very selective now. Because see, now you are going back to high valuations. It's all about play on valuations. It's all about what specifics will come out. So investors will stop, make an assessment, book profits wherever possible, but you will not see people swinging to the other side. So the bull run will see a little bit of profit booking here and there, reassessment, and then going back again to the market.
As it should be, as business as usual.
It's like business as usual.
You have to make an individual.
Correct.
Okay, I've not had a chance to speak to the Adityas, so let me get a take. Aditya Agarwal and Aditya Shah with us this afternoon, and what an exciting afternoon, guys. We're less than 30 points away from an all-time high. But Aditya Shah, I want to come to you first with the question of what is the big next push, because this weekend also becomes very important. So who is the next finance minister? Who gets the rail ministry? Now, in the bigger picture, how key do all of these events become?
So the market will look for stability. The market will look for continuity within the key ministries. The market will sense that if the BJP is able to gather the big ministries without having to negotiate and without having to give even one key ministry, then I think my sense will start to rally again. The bigger push will come in the budget if, as the Prime Minister has said today, that he wants to give money in the hands of the middle class, increase their savings. If in the budget the government takes a big step, like let's say suppose increasing the taxation limit from 5 lakhs to about 7 lakhs, then the market will take big heart that the government is doing what it is supposed to do and it is trying to boost the economy. So these small things will eventually lead to the market going higher. The market will inch up slowly and steadily, and all of these things will be seen very, very closely from the market. But overall, my sense is we will get a stable government, much more stable than the previous coalitions that were there, just because the BJP has got 240, and it's a decent enough number that it will control the finance, defense, home, the key important ministries in the government.
Let me go to Aditya Shah also on the point of what is the kind of strategy you need to adopt now. We're going into an important weekend, and what would be your take and a strategy on the Nifty or the Bank Nifty and specific stock calls as well? Aditya Agarwala?
Yes. So I think you can, if you were sitting on profits, there is no harm, Tamanna, in booking profits. I would want to book out profits, to be honest, in this market at this current level. Because again, like on Monday, we were seeing that kind of euphoria. Last 2 days, we are also seeing again that euphoria return back. And I would like to take opportunity. I'd like to use this as an opportunity to book out profits if I'm sitting on decent profits. You clearly take a look at the railway stocks. They're not going up, despite the fact the entire market has shot up. The railway stocks are somehow not participating, maybe because they're waiting for the outcome on who will be the railway minister, because there are a lot of talks going on. Similarly, look at defense stocks, though they have bounced back, but not the way they were going before the election results were out. And we did a bit of a study on the Nifty and came to a conclusion that 1 month post election results, Nifty usually gives you a return of 1% on an average, to be precise 0.90%. If I take a look at that, then I think you won't get too much of a return on the Nifty per se. There will be choppiness again in the market. I don't see a runaway rally in the market. There could be a sustained up move in the market. But yes, given the fact, if you ask me if I'm sitting on profits, I would like to book out partial profits in the Nifty and maybe take home some profits. There's no harm on a weekend to take home profits. As far as sectors are concerned, I think IT, consumer, and real estate, these are the three ones which one should focus on clearly, and they will continue to outperform for the entire month of June. I think these should be the three sectors on your radar: realty, IT, and consumer durables.
Okay, we'll take a very quick break, but all the excitement continues. You're 54 points away, 56 points away now from the all-time high on the Nifty. The Sensex has hit a record as well. So it's an exciting afternoon. How do you set up trade for the next week? What do you do in the last few minutes of trade? Actually, you have about 20 minutes odd of trade. And what should be your last-minute strategies? We're coming back with all of that.
Welcome back. You're watching India Market Close here on NDTV Profit. Let's quickly have a look at Mastech, because that clearly is the stock of the day, tie up with NVIDIA. Let's quickly pull that stock up if we can, see where it's sitting at, 8.5% higher. We have Rucha who's going to jump right in and explain what exactly is this partnership with regard to NVIDIA and Mastech. Rucha.
Thanks, Hersh. So, Mastech has partnered with NVIDIA to provide a full-stack computing platform for its clients. Now, this platform is a cloud-native platform, which is called as the ICX Pro. Now, this is used for building AI apps, and it caters to sectors like manufacturing, healthcare, and BFSI. Now, according to a release by the company, it had mentioned that this product of the company has demonstrated 20% ROCE in the manufacturing sector. So, I think this is what has played out for the company, this partnership with NVIDIA, which corroborates with the generative AI kind of trend, and this is why the stock is up today in the trade.
Hey, Rucha, before we take the larger perspective on IT, let me also try and take it across to Aditya Shah. Aditya, how large and how significant is this? And just with regard to valuations, if I may, how are valuations for something like a Mastech looking? Aditya.
So Hersh, this tie-up with NVIDIA is really positive news for Mastech per se. However, across the mid-cap IT, not only Mastech, the valuations are extremely aggressive, even though we are undergoing a down cycle per se. So my sense would be that after this rally, you need to be very careful on companies like Mastech. You can look at other companies, let's say like a Tata Elxsi or a KPIT Technologies or a L&T Technology Services. Their valuation is relatively lower, but they're also not too cheap in this market. The problem with the market is what is in the short term not going to do well, that is also not really cheap at the moment. So I would say this is good news for Mastech shareholders. However, if you have the stock, you can hold on to the stock. If you don't have the stock, wait for some bit of cool down if you want to enter the stock.
Right, got it. But it's also the sector of the day, IT actually, 3% higher on a day like this. Of course, ECB cutting rates, some bit of positive. But Rucha, talk to us about what is in store from an FY25 perspective as well. What can we expect? Because likely there will be more rate cuts on the anvil, and not just the ECB. You'll also likely see the US Fed, at least that's what it's building to. And therefore, what are the expectations and sentiments with regard to IT? Because a 3% move in a single day, 3.5%.
Right, Hersh. So firstly, I think as you and the guest on the show mentioned that ECB cut its interest rates by 0.25% to around 3.75%. Now, this is the first such interest rate cut in 5 years. Now, this can be an indication for the rate cuts in the future, and that is why this might benefit the IT companies, which were very skeptical about the near term. The deals were getting cancelled. Clients were not sure about their budgets, etc. So this is what likely is the euphoria for the IT sector today in the trade. But then let's talk about how is FY25 looking like. So the earnings and the earnings calls, etc., which the company had, they really mentioned about orders getting cancelled, and clients were delaying their decisions on the projects and were not clear on how the near term demand would be. But the order book was likely at all-time high. So again, the statement that order book is not getting converted into revenue still prevails. Also, if you look at the guidance which is given by companies like Infosys, HCL are like low single-digit guidance, and even Accenture has revised its growth guidance to 1 to 3% from the previous guidance of 2 to 5%. So Coforge had the highest order book, but it suspended its guidance. So people are not sure about the revenue going ahead, and there were order book negotiations as well. Even for Infosys, there was a reduction in scope in the BFSI deal. So BFSI is something which is, I think, bothering the IT sector. Even LTIMindtree faced 2 deal cancellations in the BFSI space. So I think people are not sure, even the company themselves is not sure about how will the revenue turn out to be in the near to medium term.
All right, thank you for that, Rucha. Definitely an interesting take. You know, what's also interesting is what Nilkant Mishra told us yesterday at Invest 29, the NDTV Profit Ground event, where there was actually a question from someone in the audience about the IT space and why it really hasn't shown the kind of growth as other sectors has. And Nilkant Mishra talked about all the challenges in this sector. Take a look.
Fundamentally, there are two issues with the IT sector. So I don't expect a 2-quarter turnaround, to give you a simple answer. The first is that there was a period of overinvestment that happened in the sector globally between 2021 and 22. Right? If you remember, all of us thought that only virtual meetings will happen and everything will be digital and app-based and all that. So what is happening now is that many of these companies, Indian companies, are benefiting from or are getting these large orders. So everyone is tracking the order inflows and sign-ups, and they are extrapolating into revenues. But what is happening is that within those companies, there are a lot of project cancellations. So the companies are saying, oh, this is not necessary. And frankly, as the US economy slows down, so it is now starting to slow down, there are visible signs, I think the pain for this sector could actually intensify, is my view. The second factor is that they are starting to see more competition. So, with the rise of the global capability centers, as companies are becoming more and more comfortable with the position in India, they are becoming comfortable with the Indian infrastructure and a lot of other things, they are starting to shift to India. So they are poaching senior people, they are paying much better salaries, and in many cases the negotiation is becoming harder, because those guys are sitting in India and negotiating with you. So I think both of these are not easy to handle issues, and the sector is still expensive. See, it's a very good sector to be part of, high cash flows, professionally managed, very clean accounting and all of that. But I think the PE multiples are still too high for us to be of interest. And I don't think we are done with the cuts yet. So I think that there is another couple of quarters of cuts before things really bottom out.
Okay, so that was Nilkant Mishra's take on the IT pack, and Aditya Agarwala, keen to know what you make of the Nifty IT, Wipro, Coforge, Mastech, everything is flying today. Anything that you would build new positions in, or is this an opportunity to book profits?
Certainly not, Tamanna. I think one should stay invested in IT, and if you missed out an opportunity to go long on the IT, there are still pockets, I think, where you can play out. Maybe Tech Mahindra, Infosys, TCS, all three stocks look interesting to me. Infosys will be the top bet for me within these three bets. Even at current levels, I think so it makes sense to go long here for a target of 1650 to about 1700 on the upside. More of a positional trade rather than just a day trade. Next will be TCS. That is also something which is looking very interesting. It's just broken out from a downward sloping channel. And I think stock is poised to test levels of 4100 to about 4200 on the upside. And the last Tech Mahindra, which has been seeing good up move from the start of the trading session. In fact, yesterday also, that was the one which started the rally. I think there is still some more upside left in Tech Mahindra. Can easily test levels of 1400 and then 1500 on the upside. So all three stocks, I think, should be looked at. If you missed out on an opportunity, maybe look for a dip on Monday if you get one and latch on to them. Because I think IT will see a good rally from here on, and it will build on. There could be choppiness, but do use those corrective days as an opportunity to go long on IT stocks.
Aditya Shah, your take on the IT sector. Nilkant Mishra doesn't seem quite constructive. He's talking about how the pain is yet to come. Do you think this is a space, considering it's not run up as much as the others, that there could still be some upside in cherry picking here?
So if you remember on Tuesday, the IT sector didn't correct at all when the market was correcting.
Yes.
My sense is that it will require at least until the end of this year for the IT orders to get stabilized. And from next year onwards, we will see good order inflow for the IT sector. So my view is that the IT sector will do well in 25 and 26 as the interest rates coincide and the US economy starts to pick up. So I'm positive on the IT names, especially some companies in the large cap IT space such as Infosys or HCL Tech, or in the mid cap IT space, as I said, NNT Technology or Tata Elxsi or KPIT Technologies. However, you need to give this sector a little bit of time, at least of 1 year.
Time of 1 year. What would you look at with a shorter period of time? And Aditya Shah, I'm keen to know what you think of Mahindra & Mahindra and what's happening there today. Is this the rural story? Is this the infra story? What makes you think that M&M is more attractive right now than other OEMs?
So M&M over the last 1.5 years has made some really very good investments. They're also investing, not only investing in the EV side of it, but they're also investing in the petrol side of their product lineup, as well as the rural side of the lineup. So a lot of factors have now come together and the stock is doing really well. So my perspective is it will continue to do well. The rural demand for M&M is really very strong. On the EV side of it, they have promised that in 25, there could be 3 to 5 launches of new cars that are going to come up. And they are also investing 2 to 3 models in the petrol side of it. So I am very positive within the OEM space, M&M, TVS Motors, Eicher Motors, all of these companies look really very interesting. I am positive on the auto sector.
What about you, Aditya Agarwala? M&M and auto sector overall, would you go for the OEMs or the auto anchors? And on the charts, what do you think about M&M?
First, let's talk about the sector. I think, Tamanna, I'll stick to auto anchors instead of auto OEMs. We've seen a decent run up in most of these stocks. Probably the one stock that stands out for me in the auto space is Atul Auto. Very interesting looking chart setup. And I think it's getting up for a big breakout from that consolidation phase. Above 550, 560, I think so stock can test levels of 700 levels as well. So do keep a close eye on Atul Auto. I think this is a good trade, not an investment, a trading bet, I would say an investment bet at current levels with a stop loss at 500. Talking of Mahindra & Mahindra in particular, I think 3,000 will be a major resistance for the stock. If you missed out on an opportunity to go long on Mahindra & Mahindra last week or maybe on the correction, I wouldn't recommend now at this stage to go long on Mahindra & Mahindra because I just see 150 point upside. On the downside, the supports come in at around 2,500. So the risk to reward is not in favor of going fresh long as far as M&M is concerned. Yeah, talking of auto anch, I think there are a bunch of names which look interesting. The top would be Endurance Technologies. That looks very interesting to me on the chart setup. Has been making higher highs, higher lows. On the upside, I think stock can easily test levels of 2,700 with the downside support close to about 2,300. Makes a good case for a fresh long. Sona Comstar at these levels looks very interesting to me. Within the tire space, I think Apollo Tire is something which is looking very interesting. So as far as Sona is concerned, I'll go long for a target of 700, 750 on the upside. And as far as Apollo Tire is concerned, I think at current levels, one can definitely look at going fresh long for a target of 550 on the upside.
Absolutely. Just about less than 11 minutes to go of a close of a very exciting trading session and a very exciting week. 2 winners today, Hersh, and this is a space that you track very closely. One is IIFL, flying today, 13.5 points up. Now the RBI's audit has concluded, but I mean, I don't know why that's such a celebratory thing. I wanted to get your perspective on that. And Paytm is the other one on a 10% upper circuit today. So what is the latest in both of these counters?
So first off, with regard to IIFL, nothing on exchanges per se. So probably the guess is that if the audit's concluded, likely resolution is on the annual, Tamanna. And probably that's what is really adding to the positivity. We can of course take Aditya Shah's view on this as well. But before I go there, let me also close out Paytm. Vijay Shekhar Sharma to play a more inclusive role in the management. That is what one of the news outlets has come out with in terms of their take. And possibly that's the other reason why Paytm is up 10%, because the fact that he has taken a backseat, a bit of a backseat, and now will be playing a much larger role may give some amount of confidence to investors. Now, whether it actually turns around a Paytm in terms of numbers, we'll have to wait and watch, because Q1 FY25 is going to be likely the most challenging quarter for Paytm in many quarters. In fact, since listing, pretty much. Because the numbers, it'll be the first full quarter where the embargo has been implemented. And therefore, the full blow of the impact will be felt in Q1 FY25. But the stock is up and away 10% higher. And Aditya Shah, let me come to you on this one. Your take on both of these. RBI overhang of sorts on both of these companies.
Let me go to Paytm first. Today morning, we have some news that Paytm's market share in incremental payment space has fallen from about 13% to 8%. So my sense is what the market is sensing here is whatever could have gone wrong has already gone wrong for Paytm. From here on, things will improve, and there is no doubt about it. Even Vijay Shekhar Sharma has himself guided that in Q1, the numbers are going to be disaster, and you should just avoid those numbers. Real recovery for Paytm will start to come only from Q3 or Q4 onwards. Paytm is now in the middle of revamping their model up. They have given back the general insurance distribution license. They have now stopped collections as well. So they are in the middle of one of the biggest model changes that we've seen in recent times. So there is a lot of speculation right now, and retail investors must try to avoid this stock at this stage. Only high risk investors who have a lot of risk taking ability should try to peddle in this stock.
One sec. Just on Paytm before you get to IIFL, I took your point that the worst is over, but I'm trying to understand what can significantly change on an upside. I mean, is there any clarity on a huge change in business model which is more revenue accretive or higher margin? Not really. Is the worst is over narrative enough?
So now what is very clear is that before Paytm was trying to do multiple kinds of businesses.
Yeah.
Now they will only focus on the loan distribution business. That is absolutely very clear. And Paytm is also going to close down the collection service that it was giving to the lenders that distribute loans on their platform. So one thing is very clear: a focused approach will come out of Paytm over the next 6 to 12 months. Of course, from a profitability perspective, the profitability could be much lower than it was anticipated before, but the growth could be much higher. So what the market is now betting on is clarity of business model. And what goes on from here is that stability in the loan distribution business of Paytm that is going to come about. So that is what I have understood about from my interactions with Vijay Shekhar Sharma as well as the entire Paytm team. A format of Paytm is now taking place. It will take minimum 6 to 9 months for this format to play out. That's my perspective on Paytm. So
Aditya, sorry if I can just come in here. Want to try and understand that take where you're suggesting that decline in UPI market share would signify that it has bottomed out. I'm not sure I quite understood that point. If you can just reiterate.
Yeah. So what I was trying to reiterate is because of the regulatory action that has taken place for Paytm, the market share, there has been a significant market share loss for Paytm of about 5 percentage points from 13% to about 8% due to the inactivity during the period of February and March, and a lot of clarity was not there. That's why people had panicked. Now Paytm has tied up with 5 different banks, Axis Bank, HDFC Bank, Yes Bank to that matter. And there is a lot of clarity on how Paytm is going to operate. It is going to use these banks for the payment gateways that is there. So the loss of market share should now get arrested is my point. And from here on, Paytm should slowly and steadily start to itch up the market share loss that it has done. So that is my limited point here. And the worst is already behind Paytm when the stock, which was already at about 500 or 600 before the RBI regulation, is now already at about 380. A lot of these problems are done about. The next leg of fall, if there is a fall, could come about if they are not able to properly channelize their loans business, which will be only clear after a period of 3 to 6 months.
Aditya Agarwala, let me come to you with regard to Paytm on charts. What do you do now?
I was hoping Hersh will not ask this question to me, but since you asked this question to me, I just answer this. See, it's a very difficult call to take, to be honest. Stock has seen a catastrophic fall, and then from there, it's seeing some kind of a consolidation. Like my fellow person said, that guest said that it's a high risky trade, and if you have the appetite to take that kind of risk, then definitely you can go long, because I see some kind of a buying activity here for sure. Some volume is happening, some kind of buying is happening here. 350 should be a strict stop loss, and on the upside, I think stock can test levels of 450 and 500. But yes, if you are somebody who wants secure and safe bets, maybe Paytm is not for you. This is not for weak-hearted people.
Excellent. I'm trying to rush through the show, Tamanna. BTST ideas, Aditya.
So I've got a couple of them. One is Ambuja Cement. It's looking very interesting. Like I said, and the cement space is something I'm eyeing on. So on the upside, 650 is my target. 610 is my stop loss. The second is Praj Industries. I see massive up move in the stock on good volumes. There's a fresh breakout in the stock. So Praj should be on a radar. Go long for a target of 645 on the upside with a stop loss at 580 on the downside.
Okay, I'm going to give Aditya Shah 30 seconds. Aditya, we're running super short on time. Bajaj Finance up 3.8%. Bajaj Housing Finance IPO. What does this unlock in terms of value? When I was doing the book value math just maybe an hour or so back, it was showing me a book value of around 20 rupees a share. Want to try and understand your quick take with regard to this Bajaj Housing Finance development coming through.
So this is broadly a value unlocking process for Bajaj Finance. Broadly what they are going to do is they are going to spin this off so that their loan book starts to come down and RBI does not force them to become a bank. That's the first point. Second point is the valuation at which Bajaj Housing Finance could trade could be very similar to 3 times, 4 times price to book, which is a really good valuation, and they could raise money separately. So I think this is a very positive development for Bajaj Finance, and the stock could trade at an expensive valuation.
Okay, Aditya and Aditya, thank you so much for joining us in a very exciting closing session. Especially when Sensex has hit record highs. Nifty is just kissing distance away from that figure. And we've seen I think, nightmares for investors of 4th of June pretty much fading out. So let's look at where we're closing. 32,282 right now on the Nifty, 2% up. But the really interesting figure post-close will be to see where we are compared to last week. I want to just pull up the advanced decline ratio before we go any further. And Hersh, this is something that we should look at as well. What the market breadth has been like, and it's just phenomenal. The kind of strength through the day. Yes. It's 302 declines to 1760 advances, nearly 1:6. I think today you've just had a fabulous day. I'm just going to pull up the heat map for a second and show you what's working before we get into the sectoral indices, etc. M&M, what a star today. Wipro, big deal, bagged under the new boss. So that has helped. Infosys, it's all about the tech stocks today. The ECB rate cut, of course, has helped increase hopes of a rate cut by the Fed in September. So you're going to probably see a very good overnight US trade as well. But it's all about the tech stocks and your rural play, your infra play, Tata Steel, Ultratech, all of that coming in. You were talking about Bajaj Finance as well earlier, Hersh.
Look at Reliance silently, on 2.5% odd higher. Not often that we see a Reliance move that much. So some of the big ones have also moved, Tamanna, just to kind of underline.
We should pull up the Nifty contributors, actually. That's a good point, Hersh. Let's just pull up the Nifty contributors and see what has been working over there. And you're right, Reliance, they're right on top, bumping up the markets as well today. Huge recovery in, some of those battered public sector stocks as well. I want to just pull up the CPSE components of public sector stocks, which have been sort of the underdog for the first half of the week, completely turned around in the latter half of the week and completely doing a fantastic sort of recovery. Adani Group stocks also have recovered massively and have seen a huge climb up. So we should pull up stocks from the group. There's standard disclaimers over there. Adani Enterprise is up 1%. I want to see what Ports Green is doing. Adani Green closing flat out today, but Adani Ports up about 2% as well. We should quickly just see what the broader indices are doing, the mid cap and the small cap. We have now closed for the week So let's pull up the weekly charts as well. 1.5 points nearly up on the mid-cap 100 and on the small-cap 250, about 2 points up. But Hersh, I'd be curious to see the Nifty chart week on week. And let's just pull that up because that's the big wow. Look at that. You're up 3%.
Yes.
You're up 3%. This was the pain that you saw on Tuesday. And this, of course, Friday close. So the highs of Monday, Tuesday you've come crashing down and then you've recovered pretty much at the same pace and higher.
Yes. So we've closed almost where we closed at where Monday is, in fact. Or in fact maybe even slightly higher than that.
I think we're higher than Monday's close.
Yes. So,
you are higher. You're higher than Monday's close right now.
Correct. So essentially, what you've done is a very quick reversal of how it's played out, and it's across sectors, right, Tamanna? Except maybe the PSE index, which hasn't reversed as much. You've seen pretty much all sectors come back in a very strong way. If you can pull up the sectoral heat map, and that's what's really telling even about today. It's not just one or two sectors not performing. It's pretty much all sectors.
There's nothing on this side.
Very well. Yes,
yeah, there's nothing on this side.
That's really what is telling. So the breadth was good, but it was across sectors and across mid-cap, small-cap as well. Not like mid-cap, small-cap underperformed or outperformed. We were pretty much there throughout.
As we just close up, let's just pull up the top gainers and losers and how many there are of the BSE 500 before we just close off today to give you a sense. This is a broad-based rally that you've seen today. IIFL, because the RBI audit is over and it's seeming like अच्छे दिन उनके भी आएंगे. Paytm on the management talking to a lot of analysts and saying that we're ready to focus and double down now. Amara Raja, the Chandrababu Naidu effect also helps. You're seeing a lot of the infra play, Suntech, Realty, Praj, IRB Infra, all of that over there as well. On the losing side, JBM Auto, Finolex, some of those that have lost a bit of steam, but even the worst losers, about 6% down.
Far and few, Tamanna, actually, to say the least. We generally see, to start off, we see double-digit negative. Today, we are seeing just about 6% and then totally tapering off to like 1.7. We don't see these kind of numbers, so just kind of underlines the breadth
of the market. Absolutely. So that's all the time we have today. But before we wrap the show and say thank you for joining us, of course, a lot more on the other side, we're leaving you with this soundbite from Prime Minister Modi at his address in Parliament, where the message is clear, picture abhi baki hai.
और इन अपेक्षाओं को पूर्ण करने के लिए, और मैंने पहले भी कहा था कि जो 10 वर्ष हमने काम किया है वो तो ट्रेलर है,